If you've ever even glanced at the world of crypto, you know the feeling. It's this dizzying sense that there are thousands, literally thousands of coins out there. So how on earth do you even begin to choose?
We are talking about a universe with over 20,000 different cryptocurrencies. And that number, it just keeps climbing, day after day.
It is completely overwhelming. But what if we could build a sort of mental map to help us cut through all that noise? Well, that's exactly what we're going to do, using some incredible insights from investor Raoul Pal to turn all of this confusion into a really clear path forward.
First things first. Why is this maze so incredibly big? Well, it turns out every single one of those coins is trying to solve the same fundamental puzzle, a delicate balancing act, a trade-off between two really crucial features.
Okay, think of it like this. You can build an impenetrable fortress, right? Maximum security. But getting in and out is going to be slow. Or you could build a super fast highway, but it's going to have way less security. Every new coin is basically an experiment trying to find that perfect sweet spot between the fortress and the highway. And to really see this in action, we just have to look at the two giants that define the ends of the spectrum.
So let's dive right in, because to find your way around the crypto world, you have to understand its two biggest landmarks, Bitcoin and Ethereum. Seriously, think of them as the north and south poles of this entire digital world. And here's the thing, these two have totally different goals. Bitcoin was built to be the ultimate store of value. It's like digital gold. Its number one priority is security above absolutely everything else. But all that focus on being an unbreakable digital vault, well, that makes it inherently slow.
Then, in 2015, Ethereum comes along. It was designed to tackle Bitcoin's speed problem, but it also added this totally revolutionary new feature, smart contracts. And that one move completely changed the game for what a blockchain could even do.
This was the game changer. A smart contract is basically just an if this, then that promise that executes all on its own, no middleman needed. Suddenly, Ethereum wasn't just a currency, it was a global software platform. It's kind of like an app store that no single company owns or controls. And you can imagine this attracted some of the most brilliant minds in tech and finance to start building on.
Okay, so understanding the tech landscape is one thing, but how do you actually navigate it as an investor? This is where we turn to Raoul Pal's framework. It builds a clear, super actionable strategy for anyone who's just starting out. Now, Paul's advice is surprisingly simple. It is not about trying to find some hidden gem that's going to go to the moon. It's about starting small, learning as you go, and building a really solid foundation. But the most important first step, it actually has nothing to do with crypto and everything to do with you.
This right here is the absolute key question you have to ask yourself. Before you even think about looking at other riskier coins, you have to know if you can handle the psychological roller coaster that is crypto's famous volatility. How you feel in those moments, that's your most important data point.
So the crucial point is this. Start by putting most of your small initial investment into those foundational assets, Bitcoin and Ethereum. They're the bedrock. They've been around the longest. They have the biggest networks. Only once you get comfortable there, once you've learned a bit, should you even consider putting a much smaller slice into exploring other riskier projects.
All right, let's really put this framework to the test. To see the massive difference between a project driven by real utility and one that's driven by pure hype, there's no better comparison out there than Ethereum versus Dogecoin. I mean, the difference here is just night and day. Ethereum has everything Pal looks for, a massive active network of real users and thousands of developers who are constantly building real things on it, from decentralized finance to digital art. It's a whole bustling digital economy.
Ethereum's value comes from all that real activity. Dogecoin, on the other hand, was literally started as a joke. Its value has almost always been tied not to its technology, but to social media trends and, what a celebrity might tweet about it.
So Pal's perspective on this is crystal clear. He's not interested in meme coins as a serious investment because his whole strategy is about finding technology that has the potential to create lasting, fundamental change in the world. And it's funny, he actually admits to owning a tiny bit of Dogecoin, but only for fun, just to watch how markets behave. It's an observation, not a core piece of his strategy.
Okay, so let's bring this all home. After all that, what is the one simple, actionable idea you should walk away with today?
The big message here isn't to run out and buy a specific coin. It's to start your learning journey with the two foundational assets that anchor this entire market. If you can understand them first,
the rest of this crazy crypto maze starts to make a whole lot more sense.
This is your compass. It's not a treasure map that points to one magic coin. It's a tool to help you navigate, to help you focus on what really matters, and to help you safely filter out all of that distracting noise.
And that's the final question we want to leave you with. Because honestly, before you invest a single dollar, figuring out your real answer to this, well, that's the most important first step you can possibly take.